All right, guys, this is Paul Singh, the Market Speculator with bullsonwallstreet.com. Today, we're going to talk about the anatomy of a winning reversal trade. We're going to use a recent trade in Facebook that illustrates this point. It's been a fantastic setup and trade in the current market. And before we even get to the trade, let me touch on that a little bit, where I said it's been a fantastic setup in this current market. Part of being a really good swing trader is understanding what setups you use. There are probably 30 to 40 different setups that I trade. And if we go into variations of them, there's even more. But just because I see a setup doesn't mean I'm going to trade it. Today, if I went through all the stocks I'm watching, I could probably find about 20 or 30 stocks to trade. I only pulled the trigger on one today. And the reason is you have to understand the market and what setups are working or tailor-made for that market. Now, in the current market, especially when we're talking about big tech, first of all, we knew what sectors are in play. We know big tech is in play, social media is in play. So we're watching Facebook. We see this big gap down. And what we've seen over and over again this year is in a strong market for this area, any one of these pullbacks or gap downs is a buying opportunity. Now, that doesn't mean we're going to just jump in just because it gaps down. It could be the one that makes it fall. So we're going to watch the price action. So we were watching very closely when Facebook gapped down in here big. It hit a high of 153 after this magical 2017 run from 115 to a little above 150, started to pull back around that psychological 150 level, and then we got the gap down. Now, we knew previously, not only in Facebook, but also the other big tech stocks, that every one of these, even scary type of pullbacks, were a buying opportunity. So because of that, we're going to lock into this gap down. We're not just going to jump in just because it's gapping down. We have to then go to the setup. In terms of reversals, this is a gap down reversal. So when we see one of these, what I'm usually doing is I want to see this thing gap down, and then I want to have an indication that it's reversing. Now, there are a couple of ways to play this. You could be really aggressive and take it on this day. You would never take it on this day because we have no indication, even if we think it can reverse. But once we get the signal, you could be aggressive. Here, I didn't take it in Facebook, but I had taken it in some other stocks. Off the top of my head, I think it was FSLR, Google, and Tesla around this time. So I didn't want to add another one here. But what I did was, once it started to consolidate into the gap here, and oftentimes when you get into the gap, you have this space where it'll float up. That was my cue to enter. Also, we were remounting this 9 EMA. So we had a lot of good things going on in terms of remounting, reversing, strong candles, volume coming back in. So a lot of good things were aligning here. And I'd also taken profits in some of my other plays, so I had room now to add another one. So when this thing started to move, we entered here on the remount of the 9. So we already got the quick reversal. We got the pull into the gap, and then we got that play into the 9. And that was our cue to get in. And it was so strong here, we figured we could get, rather than just taking the quick profit, we could actually get to the top of the range. And that's the way we played it. We played it to the high. So got in at 149.58. Just a quick 4 or 5 day hold here. Out at 153.28, which was close to the high of this day. Basically, we took it once it started to hit these highs back in late April, early May. Got out real quick. Now we're watching it again. So got out 400 shares. It wasn't a huge position, but still for holding it 4 or 5 days, getting 1,480 bucks, almost 1,500 here, not including commissions on a quick 4 or 5 day hold. Really easy trade. It was low risk to get that 1,500. We were only risking about 700 or 800. So it's that classic 2-to-1 play, where if we're even right 45, 50% of the time, we're going to get huge profits over time on this type of setup. Now going forward, I still like it. We still like big tech. I want to see a break of this range here, which we're getting close to here. And actually, I took one position today, which trade alert members were alerted to, but Facebook was one of them I was considering here for a re-entry. I think I'm going to wait till the end of the day or maybe tomorrow to see if that plays out here. So that is the reversal play. Know what market you're in. There's certain markets where you're not going to do this. So in a downtrending market where everything looks bad or a lot of bad news is coming in, we're probably not going to play this. But in a strong market where we expect continuations, especially in really strong areas in the market, we're going to go ahead and play this setup here. While I have you guys, why don't we go ahead and take a look at some of the other big techs. We've got Amazon, which I'm in right now. When it broke that psychological 1,000 level, we got in at 1,002. It's at 1,009 now. If you're not in it, I think it's still a good spot to go in. Netflix is putting in something very similar to Facebook, although it's at highs rather than testing the highs. So a little more difficult of an entry, and Google is very similar to all of these, and it is testing that 1,000 psychological level as well. Tesla, not much we can do right now. It is a bit extended. You can see the last trade here. You can go back in the videos. I think I did a video for this one as well, and this was what we just alluded to, another reversal play where it started to pull back in. We had a gap down, reversed very quickly. So another great example of the setup we're talking about in this video. We're really extended now. I'm probably going to wait for a pullback for a potential entry in Tesla, and maybe we even get a quick short out of this thing. But going back to what we were talking about again, gap down reversals in this market, unless something significant happens that suggests a deeper pullback, anytime you see a light pullback or a quick gap down, be on the lookout for a potential reversal play, watch for the signals, and then go ahead and take the trade with solid risk and trade management. All right, guys. Trade report members were alerted to this, so you can go to bullsonwallstreet.com. First of all, you can go to the free blog, and I have a ton of videos like this one in there. You can go to the free weekly swing trade report, put in your email here. I put out a report every week for stuff we're watching. We've been talking about big tech a lot, so even if you weren't signed up to the alert service, you would know what we're looking at in terms of big tech, and then you can sign up for the swing trade alerts as well. All right, guys, I'll see you with the next video in a few days here.